can see, and you can see from the numbers on, oh, I made a mistake and didn't start
Yeah,
recording.
I saw that and I hit record. That's okay. We just missed my glorious intro.
As you can see on the right hand side of your screen, we have a very diverse portfolio. Almost it's split almost evenly between men and women. Great representation of Asian and Black founders, and like Lisa said, we do need to meet more Latinx founders.
Send them our way. All right, next. Our beautiful portfolio. Look at these faces. I couldn't be more proud of the diversity. And like Brian said, it's not because we're intentionally fishing in smaller ponds. We are casting our wide net around the world, and we are simply choosing the best and brightest that come forth. We're really proud of the not only diversity of ethnic groups, but backgrounds, immigrants, the types of business models, and of course, being across all of the categories of our fund, which are data and AI, advanced materials, advanced manufacturing, and advanced logistics. Um, we don't have time to go into all of the past deals, but we can dig into our current Q2 investments. So these five represent our deals done in Q2. And yes, we have quite a clip because we have quite a sizable inbound deal flow. Let's start with, actually go to the next slide and we can do a deep dive into each of these. Natural fiber welding. So Dr. Luke here is a seasoned entrepreneur, and you're not seeing it incorrectly. This was a Series B deal that came to us because a mutual contact introduced me to Dr. Luke when he was fleshing out what started as a $40 million Series B raise. And we hit it off. And within a week, he said, Lisa, you're definitely in. You guys and your network are adding so much value. Your 25K check means the world to us. And we've been coordinating very closely with their team ever since through Refashioned OS. There's nothing that we can disclose publicly about that yet, but there's more news to come very soon on how we're hands-on helping our portfolio companies scale.
One thing we can disclose, though, is that the round went from a $40 million round when Lisa first had a conversation with Luke to what ended up being an $85 million round. And you'll see that we made some other Series B investments this quarter, two other Series B investments this quarter. Our assessment of Series B investments is the same as for any other investments we make. Basically, we ask ourselves, do we believe that there's a 10x plus potential in this for this investment at the time we make it? And if the answer is yes, it shouldn't matter if it's a pre-seed or seed or Series A or Series B investment. We go ahead and we make it.
Yeah.
Back to
In
you,
the
Lisa.
next slide, I'll talk about what they do. So natural fiber welding is, frankly, one of the companies I've been looking for for 10 years now. His background is chemistry. He has a PhD in chemistry and from the Naval Academy. And he wanted to use plants instead of plastic. And so they're an advanced materials innovation company. All of their raw materials are natural and can be biodegraded back into the planet. Even their proprietary welding process that they apply to fibers, like on the left here, you can see cotton beforehand is like this frizzled, frayed mess of fibers. That is for recycled cotton. Recycled cotton generally goes from long staple to short staple, and short staple fibers lack strength, which is why we haven't seen a boom of recycled cotton being used in clothing. Because if you're going to reuse recycled cotton, it requires that you blend it with polyester or something with higher strength to keep it a stable and durable enough fiber. So what he's done is he takes that garbage short staple cotton that you see on the left, applies their proprietary all natural, I call it like the easy bake oven. He even says his favorite chemist is his mom, because when you bake things, you're using all natural ingredients and it's how you combine them and what proportions and how you process them and how you heat them and cool them that'll give you totally different substrates and forms of bread, hard bread, soft bread, fluffy bread. That's exactly what he's doing with his chemistry on this welded fiber. It comes out dense and with the strength and durability of polyester. Without the shedding, he can engineer in moisture wicking, temperature control, which is why Ralph Lauren led their Series A. And BMW has publicly stated they're working on scaling their Mirum product, which is a plant based leather. And most plant based leathers today are using some little bit of PET because they need a polymer that is, again, strong enough to back the plant based front. They're not using any PET. It's all plant-based polymers for their leather and then for their processes applied to cotton to come up with Claris, which is used in this polo here on the right. This Ralph Lauren polo is 100% Claris recycled welded cotton. Um, I'm thrilled about the innovations and applications for this. Every single thing that's polyester in the world now has the potential to be replaced with a biodegradable alternative. That is world changing, and this is why they've been selected as one of the top 10 most innovative companies in the world. He spoke at Davos this year. They've won a ton of awards, and we're thrilled to have them in our portfolio.
And if you visit their websites, I believe that there are links that you can follow if you wanted to purchase some of the products on the market that already use Mirum and Claris. That information is on their
And
website.
they're just getting started. They have so many other things in the works that are amazing plant based alternatives for all the toxic plastic based products in the world.
Yep.
Guild form. So I forget how she came into our network, Brian. You introduced me to her, and it was love at first sight. So
Well, the first thing I did was I told her I didn't believe she could do what I said. I don't believe you can do what you say you're doing. So just keep
don't
that in
tell a
mind
proud
when we
woman
get on the
that
phone.
she can't do what she thinks she can do. Let me tell you that. So um, I absolutely love this company. Guildform is basically building a similar, well, a permutation of Refashioned OS. She's built from the ground up her own on-demand 3D printed high-end jewelry factory in Detroit. And on top of that, she's built and designed, engineered, and deployed her own ERP, her own real-time metals pricing index, her own Shopify marketplace so that all the 3D jewelry designers and CAD designers can offer their services through Shopify to anyone that has a marketplace that wants to design and sell their own custom high-end jewelry. Their go-to-market is targeting brands. And thanks to COVID, they have been flooded with inbound from some of the top brands in the world that realized, oh no, if we want to actually have products sold in the US this year, we probably should make it in the US.
Mhm.
Can you help us? So that our little startup that could, who's hustled her way to get grants and partnerships to get to the stage where she's at, is scaling rapidly, and we need to circle the wagons for support. Next slide. This is just, I love this image of her with Richard Branson. I told Brian, I did startuping all wrong. I wasn't hanging with Richard Branson on Necker Island. I want to be our startup founders. She was invited out to Necker Island, and Charisma has been selected by PitchBook as one of 66 Black founders and investors to watch. So obviously founder. Her jewelry is gorgeous. It is truly custom, and it is a truly made in the USA story of a brilliant Black woman who just rolled up her sleeves to figure shit out. And we're so proud of her.
I'll quickly add, Lisa, LPs in the fund who got the update I sent out on the 14th might remember that I included a description of why what she's doing is interesting to us. Yes, jewelry on its own is interesting, and if she succeeds, guild form could very easily shift into jewelry adjacent markets, so beauty and cosmetics. but another thing that's interesting is that because of the complexity of making fine jewelry, once she perfects the process, what she's built can then be adopted as a framework for other types of advanced manufacturing. For example, in medical devices, in high performance manufacturing, like in the military, where there's a need for very detailed and very precise processes in the manufacturing value chain. That's an opportunity for Guildform as well. And one of the outcomes of her trip to Necker Island with the group that Richard Branson pulled together is that she's already started having some of these conversations. It's too early to pursue them 100%, but the idea has been planted in her mind and she's thinking about it.
And there are, ooh, I can't wait till the next LP update because
Right,
there's more updates we can't share about her.
there's a lot of
Yeah.
there's a lot of news that we can't share publicly yet.
Next. Axle payments. Brian, why don't you take this one? It was another Series B. Oof.
Yes, Axel Payments is one of our Series B investments. I spoke to Bharat in 2019. I don't remember precisely when in 2019, but someone had told him about some writing I did in 2016 about the trucking industry, and he wanted to bounce some ideas off me. Would have loved to invest in Axle Payments then, didn't have the capital. We were still striking out with LPs. What Axle is building is financial infrastructure for the trucking industry, payments and payments processes in the $800 billion trucking industry in the United States is antiquated and broken. And so Axel wants to change all that. They have a lot of good traction. The round we invested in was a $30 million round. Really great fintech investors, supply chain investors, and so we're excited about what they'll be doing in the next 18 months or so.
I just want to point out that Series B deals coming to us. It feels kind of good. And it really speaks to the community that we've built and the value that they believe we add to the table. Here's a image of them speaking at Freight Waves. When I pulled this together, Brian was like, "Oh, I didn't know they spoke at Freight Waves."
I know. I wrote for Freightways for 2 years. I didn't realize that they won an award at
Yeah, so
Freightwaves.
Axle Payments was one of the few voted top demos at Freight Waves.
Yeah.
Aerotrax, pre-seed. Why don't you take this one too, Brian?
So Aerotrax is trying to solve a problem that I encountered between 2008 and 2009 when I was working on trying to do an operational turnaround of a jet charter company based in Allentown, Pennsylvania. And basically, the problem is in the aviation and aerospace industry, keeping track of parts is really difficult. It's really broken, paper and pencil, more tedious than it needs to be, highly opaque, um, and leads to a lot of issues around safety. And so what Aerotrax is trying to do is to digitize all that, to put it all on a platform, to increase visibility, increase transparency, and make it easier for the maintenance and repair organizations that are the backbone of the industry to avoid constantly getting hit with compliance fines by the FAA. We invested in the pre-seed round. They had contemplated going out to raise an institutional seed round this year, but have made the wise decision to hold off. Their burn is extremely low, and David has told us they could run forever, given the rate at which they're burning their capital. And so we expect they'll be out in the market perhaps late this year or sometime next year. But we're very excited about what they're doing as well. I should stop saying that because we're very excited about the entire portfolio.
Yeah. You forgot to mention their blockchain, and they're partnered with R3, so R3 literally helped them deploy.
Yeah, I left out the blockchain piece there deliberately, but yes, they're building the platform on the blockchain, and
And some
there's
big
some news
airlines
about
that they
that.
have signed: Bamboo
Yeah,
Airways, VietJet, and Pacific Airlines, etc.
yeah.
Simply Fiber. This one makes me so happy because this is our very first follow-on investment under the Refashioned Seed portfolio umbrella. Simply Fiber is, frankly, I think the very first deal that I ever did. And Maria Inter Aurang left Vera Wang to start Simply Fiber after meeting me and realizing that she could actually build a company, and there were investors that cared about advanced materials because it wasn't a pure play SaaS company. She thought there was a hurdle, that there wasn't going to be support there. So thank the Lord she made the leap, because Simply Fiber falls into somewhere between natural fiber welding, their advanced materials, and advanced manufacturing. She is taking cellulose-based fibers, think cotton, hemp, bamboo, wood, whatever is a natural fiber, and eliminating the need to spin yarn, weave, knit, cut, or sew. 5 steps she's eliminating from the process, and it's going from fiber to finished good in 2 steps. So molded or 3D printed. And not only did we put first money in alongside Heritage Group, but next slide, they have now closed their $3.5 million seed with At One Ventures leading the round. We've reinvested, and the very first intro I did for Maria was to Adidas, and they now have this fully biodegradable, 100% molded shoe that you're looking at on the right. So eliminating all those steps and having a fully biodegradable product is absolutely the future. And we're thrilled with all the not only buzz that they're getting, but real traction, because it is hard to do not only advanced materials, but couple it with advanced manufacturing. All the things that most VCs hate, physical atoms, but this is the type of meaningful industry changing innovations that we love to seek out and back.
Yeah.
And all of these deals have certainly opened up our co-investors. Oh, we're missing one in the middle. What happened there, Brian? I don't know who got blanked out. Um,
Yeah.
but everyone from Tatarang and Evolution to Ralph Lauren, um, obviously W Fund, R3, At One, Tiger Global, we're thrilled that not only do we have a great portfolio, but all these top funds around the world also are believing in the same companies we choose.
Some of our LPs are represented here too. So that makes us feel proud.
Yep. You
Is
want to
this
take
where
this?
I take over,
Yes.
Lisa? Yeah. So in terms of the rolling fund, as you know, with the rolling fund, we're constantly fundraising. It's a 506c fund, so where you'll see us posting on Twitter and on LinkedIn. We I think in one of our updates, we told you we had crossed the $1.2 million mark. Given the economic uncertainties that we're facing, we've had a bit of churn in our LP base, especially with LPs who have hit the minimum for quarter mark, and so now we're back down to 1.1 or so. Uh, 17 deals, like Lisa said, 5 investments in Q2. We're always recruiting new LPs. If you can, hopefully what we've done in our first year of existence encourages you to increase your subscription or extend for another 4 quarters. And naturally, we're always happy to take introductions to new LPs. We're raising an institutional fund. We mentioned this in the last update. The conversations with potential institutional LPs are very different now. obviously, with a portfolio as large as the one that we've built and with the investments we've made, that's where the focus is. So the conversation is much less, we don't believe you and you have the experience. It's more on the thesis and the portfolio. The issue we're running into is that all of them have their existing managers coming back and raising bigger funds. And so they're busy. They're putting more capital to work in funds that are already in their portfolio. And so it seems to us that the path forward is to seek LPs who specifically are excited about a fund one, a first institutional fund, and who have the appetite for those sorts of funds, and also LPs who don't want to wait till someone else has done all the work, and and then and then hop on the bandwagon at that point. So if you happen to know someone or an organization that fits that bill, would love an introduction. We
Couple of points.
Mhm.
Fund ones, statistically, just data, over index and outperform other funds. So if you are looking to invest, or if you know any LPs that are qualified to invest in an institutional fund, they should be looking at the stats. Fund one's emerging managers are hungry, and we have
Yep,
access to new pockets of deals that other people don't have on their radar.
yep. And on that note, we'll jump into the macro update. And perhaps we're approaching the half hour mark, if you have a question, just let me know, and we can address it. But the macro environment for supply chain technology could not be better. And I say that, being fully aware that some of the reasons why that's the case are unfortunate. So unfortunately, because of the war between Russia and Ukraine, or more specifically because of Russia's invasion of Ukraine, um, there's a lot of emphasis now on how that is affecting supply chains. So obviously, one is for the United States specifically, any supply chains that began in that part of the world and ended in the United States are under a lot of stress. And for the OECD in general, that's an issue, and governments are paying attention to this. The second issue that is becoming that is being discussed more publicly is the tenor of relationships between China and the United States. I think just yesterday, China made a very angry statement after finding out that there seemed to be plans for Speaker Pelosi to visit Taiwan. That was just the most recent incident. Before that, I was surprised that MI5 and the FBI made a joint and public statement about the immense threat posed by China. Um, in the President's Economic Report, which was published in April, this is an annual report that the President's Council of Economic Advisors puts together each year. There were one chapter specifically discussing supply chains and what the federal government can do to secure supply chains for the United States. And then there was one chapter on energy supply chains specifically, and so I count those together as two chapters just focused on supply chains. The issues were creating an environment in which these supply chains in the United States thrive and become more resilient, creating an environment where there's more private capital deployed in that segment of the market, and then creating an environment in which there are new innovations to meet the challenges of the future. Um, in the tangled web we wove, which is an article that was accompanied by a conference call from the Center for New American Security. The bottom line of what of the argument they make in that piece is that given the threats the United States is likely to face in the future, um, serious thought should be given to localizing as many supply chains as possible, which is the thesis underlying the work that ROS, that Refashioned OS, is doing.
It's literally my URL on LinkedIn and has been for years.
Supply chain localization.
Changed it from my name to that.
Yeah.
Reshoring and advanced manufacturing. Oh my goodness, yes. There was another report that I didn't put the link in here too, but I can add it later. It's a McKinsey study from 2021 that speaks to the fashion industry in particular looking to reshore to the US. And about 71% of product officers, chief product officers, are looking to reshore by 2025. Okay, that's a great statement to put out, but just like every other statement that the industry has been putting out, how do you actually execute against it? There's not much movement there on trying to make it actionable and to support the US infrastructure to adopt this type of inbound. Um, but obviously, the crisis is pushing everyone towards reshoring. And we're going to see a massive restructuring of many of our supply chains, specifically food, clothing, PPE and medical, anything that is truly vital to keeping humans alive. One of the supply chains that I'd love to do a deep dive on, maybe at some later point, if we have somebody in the audience that cares about it, tremendously reach out. Water supply chains
Mhm.
and the crisis of water on our planet. We use so much water in industrial uses and manufacturing that becomes toxic. It's a key part of refashioning our infrastructure and supply chains to really address the use of water and redirect it and repurpose it and reuse it if you are going to need it within industrial applications. So all of these things speak to the systems that are all integrated and tangled up in reshoring and advanced manufacturing. You can't apply a band-aid and just think putting in robots into US factories is going to get you there. It's a whole system that, frankly, ROS has been studying for the past 7 years deeply with all the key industry players. And it's a complex system, but we believe it's ready to make the change. Scarcity of raw materials. This also speaks to the water shortage, but also the fact that we're drowning in certain raw materials that the industry hasn't bothered to try to figure out how to reuse. We have been looking at companies that are reusing electric vehicle batteries and processing them to turn them around, refurbish them, and get them back out into market with 80% of the shelf life for a fraction of the cost of these really expensive brand new batteries. Uh, Things like that, and reusing old textile waste, waste streams from food that could be used in other industrial inputs as polymers or base materials for resins. Um, and then, of course, the scarcity of chips. You want to talk a little bit about all the chip business that's going on and moving reshoring back in chips? I think this is going to be a heavy lift.
Yeah, the problem around advanced semiconductor chips, especially, is an acute one because Taiwan accounts for north of 90% of global chip production. It's the linchpin in the supply chain for chips all over the world. And so if there are tensions between the West and China, specifically the United States and China over Taiwan, um, relying so much on chip production from Taiwan is a weak spot. It's an Achilles heel for the United States, and so the government, as you may have heard through the news, is working very hard to facilitate chip production in the United States. Intel has already said they're going to invest $100 million. Some of their competitors are making similar moves. That depends on Congress passing a law that makes funds available. I think the CHIPS Act is supposed to unlock $52 billion worth of capital, of funds for that initiative, and so we're excited. We're excited about that. One of the investments we made in Q1 is a startup that's moving its global headquarters from Singapore to the United States. It's a connected factory startup, and so we're excited about the prospects that this activity has for their business. We've touched on this a little bit. So not only is the legislature moving forward on the CHIP Act, but they're also looking to pass new laws directly related to shipping, to try to ease some of the bottlenecks that have occurred on the West Coast and also on the East Coast. And one aspect of what the government is trying to do is bring together a consortium of companies to collaborate on creating a data system, I will call it for want of a better way of describing it, that makes it easier for all participants in the supply chain to gain increased visibility, have more transparency, and collaborate more effectively with one another.
Legislation everyone thinks is going to be the panacea, and oh, well, they'll be able to force the companies to do the right thing. But that's really too little too late. By the time the legislation, especially here stateside, gets moved, we're going to be past the point of no return, which is why individual companies are starting to finally make some big bets. Walmart, I thought this was funny. There's so many headlines now that are referring to nemesis between Walmart and Amazon, and then frenemies and collaborations. But Walmart is trying to strategically strong arm Amazon out of accessing their electric vehicles for local last mile delivery. I think Amazon's going to have plenty of other picks of the litter. But regardless, they're trying to build their own moat. And then Nike is overhauling their ERP. It really speaks to, finally, companies are understanding that your business is won or lost on your supply chains. And if you're not disrupting yourself, you're going to be left in the wreckage. And shared platforms. This is a big trend. It's kind of revolutionary that a company as iconic Americana as American Eagle Outfitters was the first to dip their toe into something that I've been saying Walmart should have been doing for years, leveraging their logistics for other brands. So shared platforms for infrastructure and logistics. It's not your secret sauce, folks. And if you can't invest on the scale of Amazon, then you need to partner with people that can give you a virtual gorilla that gives you the strength of Amazon. Because Amazon certainly is investing in themselves, and for the first time, they have now opened up Amazon's supply chain to allow anyone else to leverage their unbranded infrastructure and logistics for their own benefit. But of course, there's always the little caveat of Amazon still has your data. So choose wisely who you're sharing your platforms with, and really truly understand their objectives and how they're planning on using your own data against you.
It was interesting. I think a comment someone made on LinkedIn to one of my posts was interesting. He described this as supply chain as a service. I was like, yes, that's exactly what it is. It's supply chain as a service, and Amazon is now squarely in that business.
I think it's interesting to note that Amazon has more quietly actually started shutting down some of their own internal knockoff brands. Oh, hey Jen, can you mute yourself? There you go. Go back, Brian. So they're Amazon's shutting down some of their white labeled brands where they're using, especially fashion brand retailers, design data against them to create a knockoff at a lower price with lower quality and rank it higher. And guess what? They're finally realizing, maybe it's not the best business to be in to actually piss off your customers that you need on your platform to stay in business. So they're shutting down their poor performing knockoffs and investing more in sharing their supply chain. I tend to question, is it too little too late that they have already made their bed as being the big bad wolf and now they're inviting all the little sheep into their house. This is a massive opportunity. And just to quantify how massive, the world's $100 trillion GDP all runs on supply chain. And according to an HSBC and BCG report, there's 100 trillion of investment needed by 2050 to actually achieve the net zero goals that the world is trying to set. So, where does that leave us? It frankly leaves us with tons of funds being formed, primarily by existing GPs who are just now starting to realize the massive opportunity in supply chain. They don't have the networks, they don't have the deep systems understanding, but they have a track record of investing in, I don't know, blockchain, NFTs, digital advertising. And so they're the ones that are raising billion-dollar funds to redeploy capital into this critical arena to keep humanity existing on planet Earth. I just tend to question that approach. Obviously, if we're doing everything the same way, we're not going to achieve different results. Now is no longer the time to sit back and say, well, they know what they're doing, so let's just give them more money. We're sitting here saying we're the experts. We have the experts in our network. We're confident that we know where to deploy the capital, and this is not something you could sit back in the sidelines on because it impacts every single human being on planet Earth. Anything you have to add, Brian?
No, no. The only thing I'd add is, HSBC and BCG, their report is one data point. Goldman published a report some time ago that puts the estimate at 56 trillion. The International Renewable Energy Association published a report that puts the estimate at 135 trillion. And so that's three different data points that say to me, it's a big opportunity. It's a massive opportunity. Take your pick. It's either between 50 trillion and let's call it 150 trillion, 150 trillion. That's a lot of opportunity. And our job the job of a fund like ours is to find where venture scale opportunities exist in that massive market and to make intelligent bets that lead to good returns for our LPs, to great returns for our LPs.
And also equally important, we believe, to continue to have humanity existing on this planet because there is no business to be done on a dead planet, period.
Yep. On that note, I think we can open things up for Q&A, and I'll stop sharing the screen now.
Any questions? Everyone's so quiet. Don't make me call on people.
Questions, comments. It's also okay for LPs in the rolling fund. If you want to yell at us for anything we've not done well, it's okay to yell at us now. Ben, if you want to yell at us, this is the time.
Or Dan.
Eric, Dan.
We love you guys. No need to yell.
Thank you, Ben.
I have a question.
Yeah, go ahead, Ben.
Just given the shift in market conditions, and you've written about the fact that supply chain has been more muted, but there's no question that e-commerce growth has slowed down. valuations have reduced, and more in the venture world are, we're all focused on making sure companies have enough cash in hand to get to profitability. What are you doing that's different today in light of the current conditions?
That's a great question. It's also a difficult one. We've told our founders to focus on their customers, and it would seem as if that should go without saying. But Ben, as I think you recognize, over the course of let's call it the past 18 months or so, I think the froth in the market led founders and investors to lose sight of the fact that focusing on the customer is the thing that one should always do. Um, I think at least the companies in our portfolio, I don't know so much about, some of the last mile delivery companies or some of the e-commerce companies, but at least the companies in our portfolio, what they do is mission critical stuff for their customers. And this environment makes what they do for their customers more important, not less important. And so what we've advised them to do is double down on communicating with your customers, double down on pointing out all the ways in which they are underutilizing what you've created and what you're building. Work with them, in a consultative manner to enable them to get more out of what you've already created. And I think if they do that, I'm not saying it's going to be easy, right? The macroeconomic environment is difficult, but if they do that, I think they'll be fine. No doubt, if they were dreaming about $100 million pre-money valuation at their seed round, that's not going to happen. But comparatively speaking, they should still do fine. And I think over the long term, they'll work out. They'll be okay. What we as investors can do is help them think through some of the issues that they're facing. When they're talking to other investors, help them think about how they communicate why what they're doing is important. Something that has surprised us a little bit, but not entirely, is the value of the why we invested articles that we write. And the way those work is we make an investment, and then the founder tells us when they think that article would be most helpful. And then Lisa and I put our heads together and write an article. And the goal of the article is twofold. On the one hand, we want to communicate what the startup is doing to its potential customers in language that we hope potential customers will understand and appreciate. On the other hand, we hope that generalist investors who have more capital to deploy than supply chain specialists at this point, that generalist investors will read it and gain an appreciation for what the startup is doing and why that startup should be a potential investment for a generalist investor. We're seeing that is helping a lot. So some investors are telling us that reading those articles really help them appreciate what the startups in our portfolio are doing. And so we're doing more of that. And in the past week, about 3 of our founders have said, "Hey, Brian, we think it's time. We think it's time for our why we invested blog post."
I've also reminded all of our founders that I host weekly Friday office hours, and gentle reminders that they can grab slots, and they've been more filling up my calendar on Fridays, which I welcome, because we're here for our investments, and we can only help if we are aware of what their needs are.
If we know what they need.
We reach out to them regularly. We've also been pulling together our own internal Airtable database of early stage supply chain investors and adding our own granular tagging taxonomy so that our portfolio companies, as they're doing their diligence and outreach to investors, can tag funds and add funds to our internal private database for our portfolio companies, so that they're all helping each other be able to raise their next round.
Brian and Lisa, great presentation. Thank you very much. This is Daniel. I'll just throw in real quickly because I haven't had a chance to mention to either of you. But Wiley reached out to me and asked me to do a third edition to Supply Chain Management for Dummies. One of the things that I've been very intentional about with the books is naming names, right? So I don't just explain the alphabet soup of supply chain information system, but I list companies that are doing that sort of work so that people know where to go to find it. This time through, I actually went through the list of portfolio companies for Refashion Ventures, and where I've been able to call out natural fiber welding and autonomy and some of the others.
That's amazing. Thank you.
Oh, absolutely. Thank you. We'll see if my editors let me get it up. And in fact, I've listed Supply Chain Ventures and Cambridge Capital and Refashioned in a new small section that I put in about venture capital. So I guess a couple of things there. One, I want to let everybody know that I'm doing that, and if there's somebody that I missed, I'm happy to include it, right? And that's for me, companies that make it through the filter for Refashion Ventures are more than just a run-of-the-mill startup, right? This is a pretty powerful vetting process. But the second part then is this was also an opportunity to plug the book and to tease it, so everybody. That I think that was William Randolph Hearst's strategy. It said, the way you sell a lot of papers is make sure that everybody's name paper.
Or whenever someone says, "Hey Brian, where do I start teaching myself about supply chain?" I tell them to start with Supply Chain Management for Dummies, and then to go from there. So
there you go. Well, thank you very much. But I got to say, I'm just I'm delighted to see the journey that we've been on as a fund, and it's everything that I'd hoped for and more. So
thank you.
Great job.
Thank you very much.
Thank you for your support, Dan.
Thank you.
I see some other familiar faces and people that are building in sustainable supply chains or sustainability ESG innovations.
I just have to say, all this praise, I'm really looking for someone to yell at us and be like, Brian, I'm looking for someone to yell at us. I get very nervous when it's praise, 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 and more praise.
Where is your Miriam wallet? There you
I decided I'm going to give it to my son. Because one of the reasons what we do is so important, I think, and this is getting a little philosophical about it, is that this is about leaving a better world to our children. My son is 15. Lisa's sons are around the same age. And so one of the things that keeps us going is this notion that hopefully through the work that we're doing with the fund and the community and ROS, when they grow up and they're taking over the reins, that we at least would have advanced the ball up the pitch or up the field in a significant way, and they won't be starting with a world that's on the verge of disaster. So that's where my wallet is. It's on my bookshelf. The minute he gets back from his summer travels, I will give it to him.
Dave Anderson, I see you lurking in there. Any thoughts on our LP update?
I think I think maybe it's time for you to start putting some numbers up. Just one page that talk about the investments. It's obviously this is going to be, there may be some confidential data in there, but knowing the size of some of the companies and what's in it, what the investment is, what series they just raised, that I think that would be a useful piece here for the LPs.
Yes, yes. I completely agree. In the LP updates, I remember mentioning that Angel List is working on some performance on the metrics for rolling funds. And so we made the decision that we should be patient till they have figured that out. And then once they figure that out and they make it available to us as fund managers, then we'll share that in a format in a session like this one. The thing we want to avoid is we share data and then a few months later we say, oops, there was something wrong with the data we shared before, and we're revising it. But I completely agree.
Yeah.
After 1 year in business, it's time for us to start. It's time for us to start putting some markers around what we're doing.
Right. Well, two points there, Brian.
Yeah.
One is that the data is always outdated the day you put it out there, right?
Yep.
So don't worry about
Yep.
that.
Okay.
But
Okay.
secondly, my CFO wants to have reporting on what's going on. I mean, I have to do it for my own fund,
Yes.
and since we're LPs, we have investments in this fund.
Yes.
I also have to report that into my finance people.
Yes.
And so
Yes.
that's why I brought it up. I think
Yes. Yes.
many people in this call have the same issue. So
Yeah.
yeah, I think it's sometime this year would be good. Let's just put it that way. I don't really care about rankings on Angel List as much as I care about what the positions are and things of that nature.
Okay, I'll follow up with you because Angel List does have K1s. K1s are available on Angel List, and they've been available for some time. So I'll follow up with you.
Yeah, well, that's pretty old data, though. That's my point.
Got it.
Yeah, really, that's not what I'm talking about. I'm talking about at least once a year, I need to report out to my through my financial people to the IRS and others what my holdings are, and that's why I'm bringing it up.
Okay.
Yeah. So
thank you.
Anyone else?
Any other questions, comments, observations?
Jan, you get brownie points for being portfolio company on the call. It all goes in our Airtable. Don't think it doesn't. I love data. How about Kate, Fashioneering? I know that the talk that I gave to Fashioneering was well received and kind of blew some people's minds. Anything that jumps out to you from this presentation today? Great.
She's probably tied up
Yeah.
with something else.
Well, with that, I guess we have 2 minutes anyways. We'll wrap this up and sign up and be sure to share with your friends for the next update. We're hopefully going to have oodles more to be able to share in our portfolio. Sure. And of course, the latest lineup of who we're investing in and latest deals closed. And Dave will circle back with you on what sort of reporting. What I jotted down is what each of our portfolios, past round, current round, stage, and what percentage of ownership our REFASHIOND represents within their company is my takeaway. With that, I will say happy Thursday.
Before we run, we'll probably distribute a copy of the presentation and a copy of the video. If not sometime tomorrow, definitely sometime on Monday. So keep your eyes open.
And there are links in the presentation if you're curious about reading any of those articles. All of them will be embedded.
Yep.
Awesome.
Fantastic.
Thanks for joining us.
Thank you,
Till
everyone.
next time.
Bye-bye.